Hello everyone, welcome back to my YouTube channel and I hope all of you are doing great. First of all, I wish you a very happy Republic Day and I hope all of you are doing great. So, in last week's weekly index review video, we discussed that I'm expecting a kind of a pullback or at least a consolidation in the market, but as you can see here, last week market fell almost more than 1,000 points as you can see here, and this week also the Monday's candle was around a fall of 468 points in case of Nifty. And as you can see, this whole 5 day streak ended on Tuesday when Nifty bounced back a little. So as long so this was a support zone. The first support zone was around 17,900 to 17,950. That was violated, and the next strong support was around 17,600. That also broke, and that support also got broken, and the market fell even lower. And as you can see here, this big wide range bearish candle, that is not a good sign. But next day, a little bit of bounce back. The whole global market is also falling, especially the American market has also fallen quite a bit. And budget is coming up, so there has been more volatility in the market than the rest of the days. So unless so at least till the budget, I would recommend trading with a very small position size, or it's not necessary to trade every day, so you can wait till the budget. So let's discuss what's next, how the structure is right now. So as long as the support of 16,410 is not violated, the current structure has turned to higher high and higher low, and it will remain higher high and higher low unless this support zone of 16,410 is violated. So in case of Nifty, keep this support zone marked of 16,410, and as long as it's not violated, I don't think there is much to worry about, because as you can see here, it's just a small pullback. On the weekly chart also, as you can see here, we are still in a uptrend, just a consolidation, a little bit a bigger consolidation. And the current structure, as long as this support is held of 16,410, there is nothing to worry about, I'd say. But keep the position size low, and once this support is broken, then the weekly structure will also would not be uh, that good, and it can fall down to something like 15,900 to 15,500. So so this is a very important support zone of 16,410 that needs to be held. And if we remain in the structure of higher high and high low, we can do something like this. We can retest this resistance of 18,600 and then a pullback. Then this region of 17,600 will act as a support. But as of now, 16,410, this is a major support. Now if we take a look at the bank nifty is in a relatively better structure. As you can see, on the day of big fall also, as you can see here, the half candle retraced back and it closed in the middle of the body. Half of the candle retraced, and next day a big wide range bullish candle. That is a really good sign, and it also closed above the support zone of 37,580. So in case of bank nifty also, we are currently in a higher high high low structure, and as long as this structure is held, we can expect a move towards this resistance of 40,160. And for the all-time high level, this 14,000, sorry, wait a second. Yeah, so we were discussing about the bank nifty. So this is our key resistance zone, and as of now we are in the structure of higher high and higher low. And as long as this support of 34,000 34,000 is held, we will remain in the structure of higher high and higher low, and for a short at the all-time high level of 41,850, this resistance of 40,160 needs to be taken out. But looking at the current momentum and the scandal, and the valuations are also on the cheaper side in case of banking sector, and the results have been great. So I'm expecting a move towards this level of 40,160. But as of now, that is yet to be seen, because the budget is in few days and there is so much volatility in the market. So trade accordingly. So now let's take a look at the Nifty IT. So last week we discussed that Nifty was Nifty IT was relatively in a better structure and it was kind of bullish, but as you can see here, look at this big fall. Once it broke this level of 37,823, that was the time to get out of Nifty IT, because as you can see here, look at the candle, look at the signs of the candle. Size of the candle tells so much about the strength of the trend. The As you can see here, the big white range candle signifies that the sellers are strong as compared to the buyers. And look what happened, a fall from around from 39,000 to 34,700, a little bit bounce back from the support, a long-term support. As you can see here, since September it has been taking support at this level and a little bit bounce back. So as of now, it is yet to be seen that it gives a reversal from here or a breakdown. So this is the key, very key support level of 33,870 that needs to be tracked closely. And if in case Nifty IT breaks this level, then we can see 20, 2, 3, or maybe 4, 5,000 fall, uh, bigger for also in case this support is violated, or maybe it can give a reversal from here. That is yet to be seen. So I'll be staying away from Nifty IT, because look at the structure is not in a good shape. As you can see here, the big wide range candles. Whenever I see any big wide range candles on the downside, uh, get out of from that stock or sector, because that's not a good sign. And once it violated the support of 37,823, it fell around to 3,000 points. Now if you take a look at the mid cap, as you can see here, look at the case of mid cap. So it was forming a declined parallel channel and gave a breakout and a good up move, but look at the size of the candles on the downside. uh, Observe this from since October 21. Look at the size of the candles that are going up and the size of the candles that are going down. Look at the big wide range candles. Whenever there's a down move, uh, it is very strong. So it is kind of showing signs of the distribution, as you can see here, because whenever the market goes up, there are small candle and it takes so much time. And when it's going down, look at the size of the candle, look at the strength of the bearish candle. The trend is not favorable right now, especially for mid caps. The Nifty is in a relatively better structure than the mid cap. On the weekly scale, it's just consolidating in this broader range of 33,250 to 28,860, unless it gives a clear breakout or breakdown from the upper side or the lower side. That is yet to be seen. So in case, stay a little bit cautious. I'll be a little bit cautious in case of the mid cap. As you can see here, right now it's taking the support at this level of 28,865, where it took support multiple times. So as of now, this is a strong support, and in case this gets violated, yeah, it got violated, but look at the bounce back again. So, and it also broke all these support levels that we had, 31,480 and 30,370. And look at the size of the candles. So it is in a little bit of a worrying structure, because it is showing some signs of distribution. So but unless there is a clear breakdown, just like this big wide range candle, the below this level of 28,865, there is not much to worry about, because right now it's just consolidation. as long as this area is held, and after that it can go down to 26,000 to 24,000 in case it breaks down. So in case of Nifty mid cap, stay cautious, be in very selected mid caps and stay away from the high valuation stocks. So as we discussed in the last week's video, that auto and the banks are in relatively better position, and you can see in the case of auto, uh, it also pulled back, but it exactly took support at this level of 11,212 and a big bullish candle, a very good bounce back. It shows a very big bounce back, and it didn't even fell that much. Look at the IT, how much IT fell, and look at the mid caps, how much mid caps fell. According comparatively, auto performed relatively well, so I'm expecting auto to perform well, but but as of now, just keep these two important levels marked: the support of 11,212, and right now it's also in a structure of higher high, high low, unless this support level of 10,200 is violated, and the resistance of 12,108 needs to be taken out for a new high or the continued upward journey. So keep these three key points marked in your chart: this resistance of 12,108, and the support of 11,212, and the last line of support of 10,200, because autos are showing strength and they are relatively very cheap valuation wise right now, most of the autos, and the structure is also good on charts. So I'll stick with auto and banks for right now. And now let's take look at the pharma. I was The view went totally wrong. My view went totally wrong. I was expecting a just this after this short move that we had last week. I was expecting a bounce back and the breakout of this resistance of 14,280, but it did the opposite. It fell, and it fell very strongly, just like the Nifty IT. Look at the size of the candles. uh, this shows that the bears are very strong in case of the pharma, and it also violated the support of 13,000, but a bounce back and it closed above this level, but the structure is very weak. I'll say that stay away from pharma right now because the structure has been violated. I was Last week I totally thought that it can give a bounce back from here after a short pullback that was needed till this level of till this level of 13,755. Everything was okay, but once it broke this level with strong big wide range candles, uh, everything fell apart, and this went down and violated the support of 13,000. That was a very important support. So right now I'll say stay cautious in case of Nifty IT, mid caps, and the farm, and the best risk reward right now is in the banks. If we take a look at the FMCG sector, it was weak from the beginning. I repeated multiple times that the FMCG is weak because most of the sector broke their first resistance level. As you can see, in case of Nifty also it broke the resistance, and the IT and the mid cap and the auto, every other sector broke the resistance, but FMCG was relatively weak, and as you can see here, the big fall, and it also violated this support zone of 35,650. Although it gave close above this level, this key level is yet to be seen if it gets violated, if we get a big wide range candle, bearish candle on the downside. So in case of FMCG also, the risk reward right now is not favorable, and we are still in a structure of lower high lower low as compared to the other indices, especially the auto and the bank, where we are in a structure of higher high and higher low. Metals were also performing relatively well last week, and I was expecting a breakout, and it did try to give a breakout, but the overall condition, the whole market fell, the international and the national market, as you can see the fall here in Nifty, and compared to that, metal is doing a little bit well as compared to the mid caps and the Nifty and the IT. Compared to that, metal sector is right now doing well, and this long-term support, this strong support of 5,100 is held as of now. So these two levels, just like last week, these two levels remain our key levels. The resistance of 5,907 and the support level of this 5,100 to 5,150. So unless there is a breakout on the upper side or a breakdown on the downside, keep watching, keep an eye on the metal, and keep all your favorite metal stocks in the watch list. Now if we take a look at the small cap index, as you can see here, just like the mid cap, small cap is also very weak, but as of now this it is holding this level of 20,000 27,300 as a strong support. But look at the size of the candle, it's worrying. Similar thing happening here, just like in case of mid caps. Whenever the market is going up, look at the size of the candle, small candle, and when the market is going down, look at the size of the candle. It is kind of showing signs of distribution, but it would be too early to say anything. So I will just keep observing as long as this level of 27,200 is held. I don't think so there is much to worry about, because right now it's just a consolidation. But keep an eye on it, but trade lighter positions, and mainly I'll prefer the banks and the autos, because all of the other sectors are very weak right now, especially the IT is super weak, and the FMCG is also weak, and pharma. These three are the most, these three are the weakest sector right now, and banks are okay, banks are in a strong structure. Autos are also relatively better than the whole market, and the metal also. So keep an eye on these sectors that I told you, and uh, trade lighter position at least till the budget, because there is so much volatility. uh, so just wait and mark these levels in your chart, on your chart, and keep observing this level, these levels, and take short small positions unless the budget, at least till the budget, because volatility is high and the chances of losses are high. So that was it for today's video, and in case you learned something, please consider hitting the like button, and once again a very happy Republic Day. Jai Hind, goodbye.